Thank you everyone for joining this presentation. I guess just to kick off, I'll take a step back in the last sort of 10 years. As a management team, we've been involved now with this company for 10 years. When we joined it, it had $140 million in debt, 2 loss-making mines, and we were tasked to see how we can manage the business to where it is today. It took us about 8 years to resolve debt, to walk away from an operating gold mine in Indonesia. But in the last 2.5 years, we've taken the business from a $10 million market cap business, producing about 40 million pounds of copper or 20,000 tons of copper, to today 4 operating mines producing about 140 million pounds of copper or 65,000 tons. So it's been an interesting journey for us. So as we are today, we got 4 operating mines. So we got the Triton copper mine in New South Wales. 2.5 years ago, we bought the Krakow gold mine from Evolution, and the company really went from $10 million market cap to around $300 million within a 2-year period. Exactly 2 years after that, which is July last year, we bought the Round Oak Minerals business, which is a copper zinc mine in Western Australia called the Jaguar mine, and in North Queensland, the Mount Colin copper mine, which has put the portfolio to 4 operating mines, as I said earlier, doing about 65,000 tons of copper equivalent production. As part of the acquisition, we also bought the Stockman project. That is potentially another 30,000 to 35,000 tons of copper equivalent production from that project. That's a new development, and I'll give you a bit more of a rundown in that. And each one of these mines has got significant organic growth opportunities, which we'll talk through as we go through the presentation. So as of last week, we're trading around $500 million. That's all Australian dollars. We've got 0 debt, and we had about $67 million cash in the bank at the end of the last quarter. Just touching on sustainability, we've just listened to the talk over there. I mean, that is our job. We need to be good corporate citizens. We need to leave places where they are. And as a company, we have identified 4 areas which is of significant focus for us. And for example, water and containment. And the reason why that's up, 2 years ago, we nearly ran out of water at the Triton copper mine. Very hastily had to put in a pipeline, and lo and behold, 2 weeks after the pipeline was in, it started to rain, and the dam is 120% full. So it is just one of those things, but as a corporate, we are focusing on those 4 pillars, and as part of the new development mine in Victoria, biodiversity, of course, will be a big part of how do we develop that mine going forward. Touching on the operation, so that's the Triton copper mine, 1.8 million ton process plant, producing about 43 million pounds of copper or 20,000 tons of copper. This was a mine we had 10 years ago. 10 years ago, I would have said we got 4 years life. Today, 10 years later, we're talking about 8 to 10 years life. As we're growing and investing in this mine, we see significant growth as we move forward. So the plan which we now introduced in the last years, we invested a lot of capital in this mine, where we're moving away from mining in the Triton Deeps. That's 1.2 kilometers underground in a decline, so long way down, long way up. And the grades we were mining down there was 1.1% copper. In the last 2 years, we've moved away from the low-grade production, and we started the Jaguar mine, which will come in at 1.8% copper. So you're moving away from that 1.1%. We've been mining the Murrumbidgee underground mine. 2 years ago, we thought there's 12 months left. We now drilled a hole down the bottom, 300 meters below the current workings, intersected grade and copper, which will show, again, that the extension of that mine will keep going as we move forward. The other mine which we invested in is the Avoca Tank. Avoca Tank is a small high-grade deposit sitting with grades of 2.6% copper, and that's once again getting out of Triton at 1.1, displacing with 2.8. And that will see the production profile of that mine going from around 20,000 tons of copper to plus 25,000 tons, and eventually getting to 30,000 tons of copper production out of the Triton complex, mining these three mines. At the same time, we have discovered a new deposit called Constellation 2 years ago. It's already a 7 million ton, 1.8% copper ore body. Starts on surface, so it will have a small open pit mine if that is the way we're going, or an underground mine. But you can see there in red and in that grey, that's all further extension. So we believe this would be a significant ore body, and that will be brought into production in the next 2 to 3 years. And once again, talking about that great uplift, and once this is in production, you'll hit that 30,000 tons of copper production. Just get that moving. The timing. We'll just check.
I don't think.
All right. The exploration side, we've got a very large tenement package, and you can see there we found the Constellation deposit. We did an EM survey, discovered a target. We drilled it, first hole, intersected significant high-grade copper. We've now done exactly the same model over the northern part, and we are waiting. We've already got 16 new targets, and we'll start to test them in the next 6 to 12 months. But that will show you that 10+ year life as you bring all these mines into production. Going to Krakow operations, so that's a small gold mine we bought from Evolution, as I said, 2.5 years ago. The mine has produced about 50 to 60,000 ounces of gold. It is a mature mine. We are currently running it for exploration. It will do about 50,000 ounces this year. But the main focus there is that southern part of this tenement package is one of the best exploration targets in the business. And we started doing some technical work in that mine. Now I see I need to better hurry up a bit. One of the ones we're working on there for further extensions of the mine life is Golden Plateau. When we started drilling it, we thought it's a low-grade, bulk tonnage mine. We're now seeing that every one of those cross-cut intersections is actually coming up with significant high grades. So this will become another high-grade ore body. And currently we're targeting about 160,000 ounces in that to be brought into production at the Krakow mine. Jaguar, this is one of the new mines we bought in July. It's in Western Australia. You can see very different countryside. It's an underground mine. But what we've seen is we bought it for the Bentley mine, and we sort of thought there's 3 years life in Bentley. We discovered the Turbo deposit before we bought the asset. We now doubled the size of that already. But what we have now realized is the Jaguar mine, which is higher copper, lower zinc, has basically been left alone. When they found Bentley, it was higher grade, so they moved on straight into Bentley. We're actually pumping out now, and we'll go back into the Jaguar mine because there's capacity in the process plant to fill that mill with more tons. And Jag and Triumph is a brand new deposit. Mining approvals already there. We can start it tomorrow if we want to. So we bought it. We thought there's 3 years with significant upside. We now think there's 7+ years mine life if you start to bring those resources into production. And every time we draw something down at the Bentley, at the Turbo deposit, we keep on finding more, and it's already double the size, as I said, of what it was. You can see some of those zinc grades at 11%. It's quite significant, and with good gold and copper grades in it. In North Queensland, that is in the Mount Isa region in Australia, one of the best copper regions in my view. That is a full footprint of that little operation. It's currently got about 18 months left, generating cash, all capital spent. But the model we're following there is very simple. With contract miners, we've got a camp. We mine it, we truck it down the road to Glencore's Mount Isa plant. They treat it for $22 a ton, and then we get the copper. There's no plant around, at least in Australia, which I know, which is a 500,000 tonne per annum plant, doing it at $22 a tonne, and you've got no rehab liability or tailings dam liabilities, and it's just the cost of mining and trucking. Very good little model, and if you know the region where this is, it's one of the best copper regions. We got a big tenement package, but there's various other similar sized projects of 2 to 3 million tonnes at 2 to 3% copper in that region. And one of the views for us going forward in this, how do we duplicate this and use the relationship we have with Glencore to consolidate that region with various projects similar to this, which is easy to deliver, low capital, but very good returns. One of the deposits we have is the Barbara mine. That has been mined before as an open pit mine. It's got an underground resource. We just finished a drill program and there will be a study being done to potentially start the Barbara deposit once Mount Colony is done in 18 months. But the whole idea is there that how do you create a pipeline of these projects which will take you 5 or 10 years life in that region, and we believe there's various opportunities, and we're already in discussions with some of the exploration players in the region. Then the biggest reason why we bought the Round Oak assets was the upscale of the projects. As you grow your business, you need to upscale what you do every time you do a deal. Stockman is a historical mine. That photo there is the actual tailings dam in place. So there's already a tailings facility in place. There's a 10-year reserve life. We're planning to put a 1 million tonne per annum process plant up. We're doing about 30 to 35,000 tonnes of copper equivalent production. It's there's a lot of exploration upside, but with a 10-year reserve life, there's significant further potential for that to extend. Current plans are that by June this year, we'll have a feasibility study finished or updated from the Round Oak one we bought. We'll take that to the board for approval, and then we'll start the bankable study to be finished by the end of this calendar year to then start to look at funding and how do we bring it in production. Very simple model, 2 little underground mines, straight down on the side of hill, simple flotation circuit, and just take a concentrate down to the coast is the current model. There you can see the path will do about 30 to 35,000 tonnes when it's in full production. Now you add that to the current 63, and you'll be close to 80 to 100,000 tonnes of copper production out of that out of the Aeris going forward. That will put us close to second or third biggest copper equivalent producer in Australia, behind Sandfire and 29Metals, or close to 29Metals at the time. For us, the future, look, it's about delivery on all these new operations. Integration is done. We've seen significant synergies as we grow the business, but for us it's still how do we execute on all these organic growth opportunities at each one of these mines, but also still keep the focus on growing the business through M&A. And every time you do something, you try to do a better transaction than the one you've done. And I'll take the example of what we've done. So we were $10 million. We bought Krakow mine for $65 million. We went to $300 million. We were then allowed to do a bigger transaction. We did the Round Oak deal for $234 million, and we're trading around 450 to 500 million at this time. So for us, it's about how do we keep that focus and move the portfolio up on the curve and keep delivering and create future value for shareholders by adding both organic growth and the M&A to the business. Thank you very much.